Welcome to the Daily Update, where I'll go over the action in the market for Friday, May 12th, and then we'll see how things look for Monday, May 15th. I returned from my trip. I'm back to where I usually record. Hopefully the sound is a little bit better now. I'm still waiting for some equipment to arrive that I hope will make things even a little bit better. I'm also quite tired as I record this, so you might hear that in my voice. Couple of things just to take care of before we start. I have returned from traveling and I will try to get caught up on the videos as soon as possible. I do have a new supplemental video that I posted a number of days back now that you still may find helpful. Things really haven't changed in that video all that much. So if you haven't viewed it yet, you may want to take some time to look at that. I do have a podcast that I'm thinking of changing, but for right now, it's a carbon copy of what you see right here. Also, each time I post the podcast or a daily video, I do have a PDF of all the slides and charts. You can download that and follow along. I do have a private Facebook group that you're welcome to join where I try to post some things there. And then any other platforms that you may use, please feel free to let me know about that. And I don't have a poll posted for this week. I'll try to get one up over the weekend. So let's go back and talk about what happened. At the open, we had a gap higher open. Things were looking pretty positive right off the bat. We went above R1 at 41.39. Then selling came in, took prices down below the unchanged level, down below the daily pivot at 41.24, down below S1 at 41.16. We eventually found support at S2 at 41.01, which is roughly that 4100 level. Then some buying came back in after that. Prices rebounded back up to close at the daily pivot. We were down 0.16% on below average volume. The technicals are mixed still. I wish things had been decided this past week, but pretty much for the entire week, we didn't see an awful lot of changes. We would drift a little bit more positive. Now we're drifting a little bit more negative, but we're still pretty much mixed overall. Inflation and interest rates are really the focus of the markets. We do have earnings season that continues on. We're probably getting close to the end of that now. Any Fed speak that we may get, didn't get any this past week, but there is more talk about the debt ceiling, and I have some more information to talk about with that. And then are we going to get any more banking information? So what are some comments that we can make? The 4100 level has become significant support. We've bounced down to that level now over the past couple of weeks and came up off of that. So if we break down below that, that could send things a lot more negative. The scheduled meeting that was supposed to take place on Friday between congressional leaders and the president, it was postponed until next week, and they're still trying to negotiate back and forth as to what to do with all of that. The dollar was up and interest rates were also up. And the 10 to the 5 and the 30 to the 5 have gone back to being normal. We're now keeping an eye on the 10 to the 2 and the 10 to the 3 month. One of the reasons we watch them is, number one, because they're inverted and that's not normal. The second reason is once they stop being inverted, that's usually where we start the clock counting towards, okay, now we're going to be possibly heading into a recession after that. Sentiment is still positive at 58, where it had been at 58. Our trend is still positive, but it's weakening. Both the ADX and the moving average are below 20. Our bias, I'm keeping it mixed, and our momentum is still mixed. The market is really lacking a lot of conviction right now. The economic reports that came out, we had import prices up 0.4%. Last time they came in down 0.8%. Import prices, when you take out oil, they were unchanged. Last time they were down 0.5%. Export prices were up 0.2%. Last time they fell 0.6%. If you take out agriculture, they were up 0.2%. Last time they were down 0.5%. This is kind of what rocked the markets a little bit. Consumer sentiment came in at 57.7. They expected it quite a bit higher than that at 62.9. Last time we had this report, it was at 63.5. It had been looking like it was getting better. I have a chart to show you, but now it's starting to show some signs of weakness again. One of the things that they picked up on this report is there was an increase in the 5-year looking ahead inflation expectation. It had been at 3%. Well, now it's ticked up to 3.2%. Since we're getting near the end of earnings season, I went to factset.com to see their blog post. The headline just says S&P 500 companies reporting positive earnings per share surprises for the first quarter see below average price increases. Here's one chart showing over here on the left. When they surprise to the upside, they have a tendency to be up 0.3%, where the average is that they will go up 1%. When they don't surprise or they hit the downside or it's a negative surprise, they tend to fall a lot more than the 5-year average. Here's another chart just showing the surprise against how much did that change price. And it's a little hard to read these numbers, but it still remains positive overall. This is looking at the 5-year average, where we're up 0.3% overall. And then when they go to the downside, we tend to be down minus 4.1%. Now, looking at our charts, not an awful lot of changes here. I have a few additional charts that I haven't been showing because of some reports that came out. Here's looking at the intraday action where we gapped higher above S1, and then that was the high for the day. We came down below the unchanged level. We tried to set up a base at the daily pivot. That wasn't happening. We fell down to S1, tried to set up a base there, fell down to S2. This coincided with that 4100 level. We did set up a base there and then saw some late day strength coming back up to the daily pivot. So the end of the day action is more positive than what we saw at the beginning. I mean, you can look at the chart and see that. Here's the intraday action where we had been positive overnight in the pre-market session. We shot up right at the open, and then the SPY fell down with everything else, bounced back up. After the market closed, we did see a little bit of weakness with the SPY. Growth continues to outperform value as far as the large caps are concerned. Here's the intraday chart, and this is all over the place. That's what you get with intraday data sometimes. But it just shows when this is going up, growth is outperforming, and that's where we get our buy low, sell high from. When this is going down, that's where we get our value is outperforming growth, and that tends to be more negative for the market. Looking at the ending values, where growth was down, but not as much as value with the large caps, it was actually up with the mid caps, and it was also down less with the small caps. Looking at sentiment, our Ulcer Index is still suggesting there's not an awful lot of fear. The VIX is still at a really low reading, very complacent right now, both on the line chart and the bar chart. We're still seeing a little bit of pickup, though, with the VIX of the VIX. This suggests that under the surface, volatility could be increasing, but we're just not seeing any follow-through with price yet. The equity put-call ratio, really no change on this chart. It has not generated a signal. As we're going up, this ratio tends to go down. We've just been chopping more or less sideways. The fear gauge that we look at here ticked back up slightly on Friday. It's been going up overall. And this other fear gauge also ticked up slightly on Friday. Here's the consumer sentiment report that came out where we had been looking a little bit better and then boom, we went back down. This is the preliminary reading, but it's just showing that the spread between how people are feeling and the 2-year yield is really starting to widen again. That's what this bottom part is supposed to show. And folks are still having a tendency to favor the risk off, meaning they're getting out of stocks and getting into bonds. Looking at our advanced decline line, we're still seeing a bit of a negative divergence in the short term where volume is falling more than price. Longer term, we're also seeing this continued negative divergence. The new highs, new lows continue to show weakness, both on the 5-period chart as well as the 10-period chart. The advanced decline ratio has now dropped below 0 for both the red line and the blue line. Accumulation distribution. This is one positive area. We're still above an advancing moving average. We're still seeing a negative divergence when we look at the NYSE cumulative advanced decline line as well as the regular advanced decline line. That could bode for some longer-term weakness that could eventually come in, and then you look back in time and say, oh yeah, I see where there was that negative divergence. Why didn't I go short, or why didn't I get out of my long positions? We're seeing that same thing when we look at common stock. There's a negative divergence based on price and volume. Then looking at our broad range, the NYSE continues to be below the moving average when we look at the advanced decline line. We're coming down but still above the moving average with the S&P. We're below the moving average with the mid caps and still showing weakness with the small caps. Looking at our trend, not a lot of change here. The green line is still on top, so we can default to the positive, but we're not trending overall. The ADX continues to decline and it's below its moving average. volume continues to drop off. Looking at some short-term charts, again, nothing was really decided. We're right on this pivot point right now. We go above that, that's positive for the month. We drop below it, that's negative for the month, and we continue to be right on that level. At the bottom, you see where volume continues to drop off. Now we're right on the 20-period simple moving average. Looking at our stochastics chart, we're still above 50 with the short-term stochastic, but it did turn down. We're just a little bit above the midpoint with the intermediate term, and it's trying to turn down. The long-term stochastic, which is still negative, is now trying to turn up. The force index continues to be positive, but just barely positive. Now, looking at some intermediate term charts, the balance of power is below the dashed line and declining. That's negative. We're right in between the double and triple exponential moving averages. That's showing a real mixed environment. The go, no-go system is still more positive with the darker shade of blue bars. If we fall going forward here, we'll be looking at this 4,077 level. This is an anchored moving average going back to the all-time high. The TTM squeeze still tends to be more negative overall. The PPO is still positive in the long and intermediate term, even though it's coming down. And then in the short term, we're just barely dropping below zero now. It's kind of hard to see, but that's a minus 0.12 reading. The Arun indicator also continues to be negative. We're still seeing this divergence when we look at the McClellan oscillator. First of all, in the short term, we ticked back up just slightly, but we're still below zero. Longer term, we're also seeing this negative divergence where the S&P was going up, but the McClellan oscillator was not matching that. We're seeing that same negative divergence with the NYSE McClellan oscillator. The Swinland trading oscillator, we came back up to zero based on price and have now turned down. We've also dropped below zero based on volume. That's more negative. Our PMO study still showing this longer term negative divergence with the PMOs that are rising. That continues to fall. We're also falling with the buy signals, and we're also going down slightly with the PMOs that are above zero. Here's another look at the PMO where we're negative overall. The PMO is below its moving average. We're also declining based on price and volume. The Elder Impulse system for the S&P is switched to neutral. The parabolic SAR continues to be negative. All of our oscillators continue to be negative. We're keeping an eye on this short-term slope oscillator. That's the most sensitive one that we have, and if it starts to go back up, it will be the first one to cross over positive. We're still above all the moving averages in our moving average tree. We're right on the 20-period simple moving average. We're still seeing this negative divergence, and we're at 50 with the BPI, so this is more negative overall. The broader range NYSE bullish percent index, we're still below 50. We turned down just slightly. That's also negative. The chicken money flow still continues to show some strength, so that's more positive. The chicken oscillator is above zero and advancing. That is positive. The money flow index is turned down below 50. That's negative. The ultimate oscillator continues to go up across 50. That's positive. With the vortex, we have the red line and the green line right on top of each other. On balance volume continues to be negative. We're below a declining moving average. The summation index based on price is declining and based on volume is also declining. It's below zero. We're also seeing a negative divergence. And then looking at those stocks that are above their 200-day moving average, we're still seeing that negative divergence when the 200. We're also seeing this divergence when we look at their 50-period moving average. Looking at some Fibonacci studies as well as some different lines. First of all, our quadrant, we're still bumping into this upper resistance at about 4170. We've not been able to penetrate that level. Looking at our short-term fib chart, we're just at the 100% retracement. This is at 4123 and we closed at 4124. Longer term, we have overhead resistance at the 4156 level. And even longer term, we're still far away from this upper resistance, but if we start to fall, we'll be watching the 4020 level. This is just a look at our 50-day cycle. We do have the end of a cycle coming up here pretty soon. There also should be a line across here at the 4080 level. That's also another support level. So we have support at 4100, 4080, and also at the 4020 level if we start to see some weakness. This is also another area of potential resistance. Going back to the major lows that were set in 2022 and then drawing a parallel line going back to the all-time high. This is at about the 4,200 level, but we're still a ways away from that. Looking at our different charts, we're still seeing a doji signal on the Heiken Ashi. We're turning a little more negative with the Kegi. It had been a red line, but now it's starting to point down. The Renko is looking a little more positive. It had redrawn and was looking more negative. Now we're seeing some open boxes. The 3-line break continues to be positive. Looking at some other indexes, the equal weight index continues to underperform the S&P 500. This is another chart that I haven't shown in a while where we've been going sideways with the Dow. We're starting to see more of a negative divergence when we look at the transports. A bit of a divergence here when we're also looking at utilities. So that could also suggest some longer term weakness. Then looking at new Dow theory, where we have the S&P on top, we're still above this blue line. So far this level has been holding. When we look at the NASDAQ, we're also above this blue line even though it turned down slightly. The transports continue to underperform the Dow. That could also suggest longer term weakness. The Dow is still above its 50-period moving average, and the diamonds remain negative. The NASDAQ is still above this red line here. It came right up to this R1 level, and that's acting as resistance. The NASDAQ 100 also came up to this R1 level, which acted as resistance. The Qs for the Elder Impulse system has switched to neutral, and we're above this 38.2% retracement level. We still have quite a ways to go to get to further resistance. The longer-term weekly chart of the Qs still remains positive. We're above this anchored moving average going back to the all-time high. The small caps, though, continue to show weakness. Recent death cross came down to this S1 level, which acted as support, but we were still down on the day. Looking at another chart of the small caps, we're below the RSI 50. We're also right on top of the moving average with the MACD. Small caps still continue to underperform the large caps. The Elder Impulse system for the small caps remains negative. The micro caps were down but did not set a new 52-week low. We would have to break 100 for that to happen. The mid caps also looking more negative. Recent death cross closed just below this S1 level. And the Elder Impulse system for the mid caps remains at negative. The home builders turned down a little bit in Friday's session where we're going sideways with the S&P. The ratio is still holding up fairly well even though it came down, and we're seeing this really strong correlated relationship starting to weaken a bit, so we'll keep an eye on that. Looking at the financial sector, we're still showing weakness. The financials continue to underperform the S&P, and the regional banking ETF continues to underperform the financial sector. Our interest rate study, no change, and this is what I based the supplemental video on that I posted earlier this week. We're not breaking to the upside, nor are we breaking down, so right now, not a lot has changed. Looking at bonds, we had been seeing a little bit of improvement with our shorter term correlation. They have been moving in opposite directions. As this goes back up, that means they're moving more in the same direction. Well, it turned back down on Friday. Bond yields were up and bond prices were down. Then long term, the special K still is starting to come back underneath this red line. That's more negative. And then looking at our MACD, this is still holding up. This is a weekly chart where we broke above the 0 line. We're rolling over a bit with the MACD, but it's still positive, suggesting that this breakout above the trend line is still legitimate. Then an update of our possible positive scenarios. The Qs did outperform the S&P. This is our growth area where we're going to get some upward movement from. Discretionary was down slightly. Large cap growth is outperforming large cap value. And then our growth to value ratios, the large caps, the mid caps, and the small caps are showing some improvement. We want growth to outperform value if we want the market to really go up. The utilities still are outperforming the S&P 500, and in a real strong environment, we would see this ratio going up. It's been going down to sideways. Looking at the Amex, NASDAQ, and NYSE, and then taking a 5-period moving average of their highs minus the lows, we're still below 0 here. That's longer term and broader term negative. The 50-period moving average of the new highs minus the new lows, it's ticking down, but it remains positive. The black line that we based the red line on the previous chart, this is the indicator, and we're coming back up slightly. We have a reading of 4. The 2-year Treasury yield, we're wondering if this spike and then drop will give some support to stocks. So far, that has not happened. Looking at our staples to S&P 500 ratio, we're wondering if these double spikes here and then seeing this ratio really drop, if that will give some support to the market, but so far that has not happened. So what's our outlook for Monday? Earnings season is continuing. We're getting near the end of that. The technicals are mixed, and now we're shifting back a little bit more negative. We have the Empire State Manufacturing coming out on Monday, the whole list of geopolitical events. Probably the thing that's really coming to the top right now is this whole debt ceiling situation, unless we get something else that comes flying in out of left field. Looking at the Stock Traders Almanac statistics for Monday, we tend to be more neutral to positive across the board, with the Dow and S&P being up 57.1% of the time, the NASDAQ not quite as strong, being up 52.4% of the time. And then we tend to be more positive in May than we are negative. So our scenarios can't really go with the down one unless you want to bank on those negative divergences that we're seeing and the fact that we cannot break through that upper resistance. Can't really go with the up one right now because we're really mixed and we are seeing an awful lot of negative divergences. So we're still tending to favor the sideways trend or neutral trend for now because the ADX is weakening. It's below its moving average. Both of them are below 20. It is positive, but the green line continues to decline. So looking at our warning signs, there are numerous negative divergences that are all kind of coming together right now. The VIX is still showing a lot of complacency. The S&P is underperforming utilities. We're in a risk-off posture, meaning we're getting out of stocks and into bonds. Small caps are underperforming, and now mid caps have recently generated a death cross, which is more negative. Earnings season continues, but is starting to come to an end. On the positive side, we do have this seasonality and setups that apply to the whole year. Those still remain. Lower price levels may provide some support, especially that 4,100 level for right now. The NASDAQ, we're still wondering if it's breaking above that major resistance that we had been seeing. So our conclusion, the S&P, it's mixed, it's not trending, and it's showing negative divergences. The same conclusion that I reached in yesterday's video. In short term, we're mixed. Intermediate term, we're mixed, more with a negative slant now since we had 2 down days in a row. Longer term, we're still positive because we're above the 200-day moving average and we had a recent golden cross. So thank you. I hope you found this helpful. I will do what I can to prepare the weekly video, the intermarket analysis video, and the deep dive video. So I hope you have a really nice weekend and I will talk to you in the next video.